Heya Cryptozens, it's 10 p.m. Pacific time. My name is Nikodemus, and welcome back to the Crypto Overnighter, where we take a nightly look at the crypto, NFT, and metaverse space. And keep in mind, nothing in this show should ever be considered financial advice. It's 10 p.m. Pacific time on December 9th, 2022. It's Friday night. You made it. Now let's go. Because the FTX train just keeps on trucking. Sam and FTX and Alameda Research can be tough to get away from lately. And here's a perfect example. Last night, we were talking about Sam and Representative Waters and whether or not Waters was going to have to subpoena Sam to show up or not. Well, it proves that that might not be necessary. Because SBF has agreed to testify at a meeting of the House Financial Services Committee on December 13th. He said on Twitter that he is willing to attend the meeting in response to requests from the committee chair, Maxine Waters. Now, she had said that his attendance at the meeting was imperative. And this is interesting to me because both Sam and his attorney failed to respond to the Senate Banking Committee's request for testimony or cooperation. The committee leaders stated that it's important for him to show transparency and accountability, and they will continue to work on having him appear before Congress. Now, I wouldn't get too excited by the idea of Sam testifying. He's probably not going to show up in Washington, D.C. for a sit-down with the House Financial Services Committee. I expect that he will continue to virtually attend these things, at least until D.C. asks the Bahamas to extradite him, but that's a different matter. Because in the meantime, the Senate Banking Committee has threatened to issue a subpoena if he does not cooperate with their investigation. A spokesperson for SBF declined to comment on the situation. The committee has scheduled a hearing on the topic for next Wednesday, and SBF has given the media several interviews since the collapse of his company, but previously declined an invitation to appear before the House Financial Services Committee. Which means if he does not respond to a subpoena for testimony, a contempt of Congress charge could be pursued through the Justice Department. The current Congress will end soon, but the committee chairman, Senator Brown, will retain his position in the new Congress. And somehow, a number of disgraced crypto personalities and former executives have been cropping up, hoping to turn SBF's failings into their redemption arc. Spoiler alert, it ain't happening. But that's not stopping them. Because earlier today, a co-founder of Three Arrows Capital accused SBF of exerting pressure on the media. SBF, of course, denies this. And later, the CEO of Binance, Changpeng Zhao, criticized SBF and others associated with FTX. Now, SBF responded, once again acknowledging that CZ won, leading many to believe he sees the situation as a game, which is pretty understandable, given how cavalierly it seems that he has treated his business. At any rate, CZ said no one is a winner in this case. So what happened here is CZ and SBF both have different versions of the exchange's business dealings prior to the collapse. Both of them have exchanged criticism over Twitter, with each one disputing the true nature of their private business dealings. Sam asked Zhao why he would, quote, lie about their situation since he already won after FTX's bankruptcy. CZ said, quote, unlike Kevin O'Leary, we continue to do due diligence even after we make an investment. As an early investor in FTX, we became increasingly uncomfortable with Alameda/SBF and initiated the exit process more than a year and a half ago. And at first I was thinking, why is Sam taunting CZ like this? Because last time, CZ crushed Sam's entire empire with a single tweet. And this is a more recent telling of the story, but what happened is, according to CZ, Binance started reducing its equity position in July of 2021 due to concerns about Sam and Alameda's practices. CZ said that this caused Sam to go on multiple unhinged rants against the Binance team, threatening to go to, quote, extraordinary lengths to punish Binance. CZ said Binance still has these text messages. Now, this reportedly led FTX to launch a major investment campaign among friends in high places. This includes the media, politicians, and celebrities like Kevin O'Leary. The idea being to influence public opinion in favor of FTX and against its opponents. In early November, CZ suggested that FTX was lobbying against other players in the crypto industry in Congress. Later in that month, Congressman Tom Emmer said that he received reports of SBF conspiring with the SEC to create a regulatory monopoly for FTX in the exchange business. CZ said, quote, "You don't have to be a genius to know something don't smell right at FTX. They were 1/10 our size, yet outspent us 100-to-1 on marketing and partnerships, fancy parties in the Bahamas, trips across the globe, mansions for all their senior staff." Now, conversely, CZ tweeted in June that his company was especially frugal during the 2021 crypto bull market and had developed a rather large war chest relative to other competitors. Now, unlike CZ, Sam alleged that his company was the one that initiated talks about buying out Binance's stake in FTX, echoing his word to Kevin O'Leary on the matter. He also claimed that Binance never had the right to pull out as an investor unless FTX voluntarily opted out for a buyout. It was at that point that Sam called CZ a liar. He said, quote, "But again, none of this is necessary. You won. Why are you lying about this now?" Now, there is some speculation out there that FTX may have had more of a hand in its own demise than previously expected. And how messed up would that be? To find out that Sam and his crew caused their own problems in more ways than one. Now, from Sam's side of his exchange with CZ, it seems pretty clear that he perceived a rivalry, whether there was one or not. Now, another contemporary of Sam's was Do Kwon. Now, here's where things get interesting, because it looks like Sam may have been involved in Terra's crash. Federal prosecutors are investigating whether he manipulated trades that led to the collapse of UST and Luna earlier this year. He may have used his control of FTX and Alameda Research to benefit the organizations and cause the downfall of Terra, leading to a domino effect in the industry. Now, of course, this investigation into Sam's potential involvement in Terra's crash is still ongoing. At present, nobody is saying he's guilty. It's unclear. Now, Do Kwon shared the news on Twitter, stating, quote, "What's done in darkness will come to light." Now, Kwon apparently believes that Genesis Trading provided $1 billion in UST to Sam or Alameda Research before the stablecoin's depeg. He said, quote, "I think the time has come for Genesis Trading to reveal if they provided the $1 billion UST shortly before the crash to SBF or Alameda. The purchase from LFG was represented as stemming from an interest to participate in the Terra DeFi ecosystem, not to provide ammo for the peg attack." Now, Kwon has also questioned why Alameda borrowed more than $1 billion worth of Bitcoin from Voyager during the depeg, and why they requested other companies to obtain over $10 million in Bitcoin. Now, the crash of Terra and FTX have been major negative events in the crypto world this year. Terra's problems began in May when UST lost their peg and plummeted below its $1 target. This allowed some traders to exploit the situation and profit through arbitrage trading. This caused the prices of both tokens to drop near zero in a matter of days. FTX also faced liquidity issues and crashed, leading to a market decline and causing problems for many companies and individuals involved with it. Sam has made some controversial comments about the events, but has not provided clear information on what happened. CZ and Elon Musk have called him a fraudster. And some sad and unexpected news of FTX's implosion came today. Unexpected as this impacts the media more than finance. Bobby Moran will be the new CEO of The Block. Now, The Block is a crypto news website. Their previous CEO, Mike McCaffrey, reportedly financed the platform through loans from Alameda Research. Moran said that McCaffrey restructured The Block in 2021, which involved taking out two loans totaling $27 million. There was also a third loan, $16 million, used to purchase property in the Bahamas. Moran said that the former CEO failed to disclose the loans to the leadership team. He called that a, quote, serious lack of judgment. And so it came to pass that leadership asked McCaffrey to step down. Moran said no one at The Block knew about the financial arrangement except McCaffrey. Moran also said that there was no evidence that he tried to influence the newsroom or research teams in their coverage of SBF, FTX, and Alameda Research. Now, personally, I have no problem believing that the staff at the block were entirely in the dark about all this. Unfortunately, the suspicion is still going to carry through. I'll say, based on Frank Chaparro's excellent interrogation of SBF, I don't think McCaffrey had his thumb on the scales at the block regarding coverage of SBF. Now, McCaffrey became the CEO in April of 2020. He was previously the chief operating officer and chief of staff at the block starting in 2018. McCaffrey reportedly led the buyout of non-employee shareholders in April of 2021, giving him a majority stake in the site. Now, the block's editor-at-large, Frank Chaparro, said that he was utterly shocked and felt disgust and betrayal by McCaffrey's actions. He said McCaffrey was literal scum, and he kept everyone in the dark. The block's page on financial disclosures stated that it was fully transparent about its financial holdings to avoid bias or impropriety. Larry Cermak is the block's VP of Research, and he posted a list of Alameda Research's investments to his Twitter account on December 6th, but did not disclose financial ties between the news site and the hedge fund. Cermak said that McCaffrey never asked him or anyone in research to cover FTX or SBF in any particular way, and that they had complete discretion to do their jobs. Now, we were just talking about Binance, and frankly, the gamesmanship that goes on between the peers in the open marketplace. Earlier this year, Binance decided that they were going to trim down the number of stablecoins on offer by setting it up so the exchange auto-converts any USDC that comes in straight to BUSD, Binance's stablecoin. And it wasn't just USDC. There were a couple of other stablecoins that were set up to be auto-converted to BUSD, but USDC was certainly the big one. Well, Coinbase has suggested that its customers should convert their Tether stablecoin to USDC. The exchange said that USDC is a safer option in the wake of FTX collapse saga. Conversion of USDT to USDC on Coinbase's platform will be fee-free. They said, quote, "We believe that USD coin is a trusted and reputable stablecoin, so we're making it more frictionless to switch. Starting today, we're waiving fees for global retail customers to convert USDT to USDC." Now, stablecoins are very important to the crypto space. They're used as a source of liquidity. However, there's always concern about whether an exchange has enough reserves to back their value. This debate became more intense after the FTX collapse, when some firms with connections to FTX and Alameda Research went bankrupt. There were also accusations that CZ and SBF had argued about the stability of Tether. Now, for its part, Tether published a report on its reserves just before FTX filed for bankruptcy. Now, this report said that 82% of its reserves were in cash, cash equivalents, and short-term deposits as of the end of September. Coinbase also said that USDC is backed by cash, and short-dated U.S. treasuries held in U.S.-regulated financial institutions and can always be redeemed for U.S. dollars. There is a growing competition among crypto exchanges for stablecoins. Coinbase's suggestion that customers convert USDT to USDC comes after Binance cut support for USDC, causing a $3 billion drop in its market cap. Now, Tether's USDT is the largest stablecoin, with a market cap of $65 billion, while USDC has a market cap of $42 billion and is taking market share from USDT. Binance's stablecoin, BUSD, has a market cap of $22 billion. Now, let's go from USDC to DeFi, because it looks like U.S. regulators are seeking input from the banking sector on the potential risks of money laundering and terrorist financing in the DeFi industry. The Financial Crimes Enforcement Network, or FinCEN, is looking to review current laws in this area. Now, what's happening is that FinCEN is looking for some feedback from the banking industry on how decentralized finance could impact its efforts to combat financial crime. The agency's acting director called the digital asset ecosystem and digital currencies a, quote, key priority for the agency. Now, for their part, FinCEN is reviewing its anti-money laundering framework for cryptocurrencies and digital assets. This is to determine if additional regulations or guidance are necessary. The agency is engaging with relevant U.S. government stakeholders and is looking for input from the banking industry on potential vulnerabilities and risks related to DeFi. FinCEN is particularly concerned about DeFi's potential to reduce or eliminate the role of financial intermediaries, which is crucial to its AML efforts. The agency also recognizes that DeFi will continue to impact the financial services industry and is committed to mitigating the illicit finance and national security risks posed by the misuse of digital assets. This review by FinCEN is held in response to President Joe Biden's executive order on ensuring responsible development of digital assets issued on March 9th. This order included a recommendation for increased private sector engagement through the publication of official documents as well as programs that facilitate information sharing between public and private sectors. Now, if you think, because I'm talking about DeFi, that I can't possibly be talking about Bitcoin, I tell you that kind of thinking is so 2020, and you are so very wrong. However, I can understand. Taproot was a long, quiet, bearish year ago. Now, what I mean is that Taproot's support across the industry is still kind of limited 1 year after the Bitcoin soft fork. This indicates potential for innovation and adoption of Web3 solutions. The Taproot upgrade took place in November of 2021 and improved the efficiency of validation and storage on the Bitcoin network. This enables DeFi services and addresses privacy issues. The changes to the Bitcoin network were welcomed by the industry as many Bitcoin holders do not use their coins on DeFi applications. Internet Computer announced the integration of its mainnet with the Bitcoin network, which allows smart contracts to hold, send, and receive Bitcoin without the need for third parties or blockchain bridges. The company said nearly every DeFi application building on its blockchain plans to incorporate Bitcoin. Smart contract functionalities for Bitcoin allow users to send their coins to Bitcoin's smart contract address and withdraw them directly from their wallets. This enables trust in cryptocurrencies and DeFi applications. Alex Miller is the CEO of the Web3 platform Hero, spelled H-I-R-O. He said, quote, "The recent implosions in centralized entities like FTX will only serve to keep pushing forward interest in truly decentralized finance, where transactions are secured algorithmically at the consensus level and users don't have to trust third-party custodians to do the right things with their coins. And, given its history of pioneering decentralized trust, Bitcoin is the most logical place for people to conduct DeFi transactions. And while it's true that DAOs could also benefit from Bitcoin's smart contract functionality, DeFi is probably going to be the biggest area of growth. The way things have gone, and given the inherent lack of trust in centralized systems, DeFi might just end up being the biggest area of growth in the ecosystem. And that doesn't mean that Bitcoin has to be left behind. And that's going to do it for us tonight. I want to thank you, my listeners, because when you stop listening, I will stop talking. We'll see you tomorrow night.